My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. At any given moment, the prism can be overwhelming and overpowerful. But remember, after what I tell you tonight, that the prism can also be wrong. Once again, we're back in a world where it feels like stocks are done going up, and the apocalypse is now because we can't satisfy the earnings beast, with the Dow losing 86 points today, S&P sinking 0.47%, but the Nasdaq plunging 1.21%, and that's where we're going to spend some time. Why did this happen? I think when the CDC issues new guidance urging even people who've been vaccinated to go back to wearing masks in certain circumstances, that makes everybody freak out about the Delta variant. And when you're worried about the pandemic, what do? Well, it's pretty simple. Sell. The CDC is consistent this whole pandemic. Consistently wrong. They know nothing! And now they're scaring the heck out of us, making us doubt the effectiveness of the vaccines rather than pushing us to get our shots. So it's no wonder stocks traded down on great results today. If the authorities imply that we're all going to get COVID anyway, I mean, who can blame the weak hands from... Sell. I bet the same thing happens again tomorrow. So you pick up whatever's wrong and close our eyes to whatever's right, which is what's happening right now after the bell. Doesn't help that when we get about 2 weeks into earnings season, meaning right about now, our perception does tend to shift. If the first couple weeks were ugly, we typically get a nice rally at this point. Why? Because we adjust our expectations. After a series of disappointing quarters, we start seeing bad as not so bad and good looks great. Oh, but now we have the opposite situation. In the first couple of weeks of earnings season, stocks ran the table, rallying as though totally oblivious to anything in the real world, right? We had one bad day a week ago. Admittedly, it was very bad. But all it taught us to was to buy the dip. The market's been pretty much straight up for ages. So after 2 relentlessly positive weeks of earnings, we've adjusted. Great becomes merely good. Not so bad becomes just bad. And not that good becomes, well, let's just say things are being viewed as terribly. How about that? Yeah, the prism's going negative. Suddenly you get a rally in the recession stocks, worst kind of rally, utilities, drugs, food names, because the CDC is scared, not just the unvaccinated, but you. And that's an unhealthy situation. Now, look, I think it's good that schools are allowed to reopen. Masks probably a smart idea, given that most children aren't vaccinated yet. Remote schooling really hasn't had a great track record. More importantly, it's been a millstone around the neck of our economy. Why? Childcare. Yeah, childcare. If you had an elementary school-aged kid, chances are someone in your household had to stay home to supervise them rather than working. It's the way so many single moms have dropped out of the workforce since the pandemic hit. Whenever you hear people wondering where all the workers went, schools closures are a huge part of the equation. Public schools are the closest thing we have to free childcare in this country. With remote learning, millions of formerly paid employees had to stay home, act as unpaid truant officers. I know the Commodities Research Bureau's indicators flash in red. I know aluminum and copper staying elevated. But if schools can't reopen and stay open without causing huge outbreaks, that would be a huge positive. For the moment, though, the CDC's new guidelines on the need for wearing masks indoors was viewed as a tragic negative today and weighed on the averages and created that horrendous prism that everybody looked through every single stock tonight with. Every single one. It doesn't matter the 3 pillars of industrial stocks, General Electric, Raytheon, and 3M, all reported better than expected numbers this morning. The prism just kept them all down on the farm. You know that only Raytheon managed to buck the trend. I'm wondering if maybe that's because they have an excellent aerospace and defense business that's mostly immune to the gyrations of the economy and also essential to fending off China if something crazy happens in the Strait of Taiwan, which anyone can certainly dream about or have that nightmare, given that the Chinese are wrecking the stock market. Of course, the prism does change from day to day. Why don't we define what gives it, what defines at any given? Why don't we show what defines it at any given moment, so then you can understand why tomorrow could be ugly and you might want to buy. First, as usual, it's the bond market. enjoying another rally today with rates going down, suggesting a horrific decline in economic activity. Now, that doesn't jive with a single statistic I've seen. Hey, but if the CDC is telling you the great reopening is now the great reclosing, well, that means the Fed doesn't need to tighten tomorrow, but it also means that business is going to fall off a cliff. Now, I have to tell you that the CDC, the NIH, and the FDA have all created many moments of pain and hysteria that the market's usually been able to shrug off. This time, though, the prism says we won't be able to do that so quickly. So you should buy the recession-proof stocks that don't need to worry about the economy, like the drugs and utilities, not Raytheon, GE, and 3M, nor anything great they reported tonight. For example, you have to remember that this prism could be temporary. Today, the market had a jaundiced view of just about everything. Yesterday, we were a lot more positive. Tomorrow, nobody knows, but I suspect the market is still in fault-finding mode. Here's what we do know. We got a bunch of very important quarters after the close today, and every single one of them is considered horrendous. Every one. Does that make sense to you? I told you to expect incredible things from Alphabet, the parent of Google, thanks to the boom in online advertising, as all sorts of travel and leisure outfits spend money again. Well, sure enough, Alphabet shot the lights out. They earned $27 per share. Street was looking for $19. Sales $5.6 billion higher than expected. Advertising on fire. Google Cloud on fire. But wait a second. If the CDC's right, no one's going to travel. Sell Alphabet. Next up, Starbucks delivered a terrific set of numbers with a very encouraging same-store sales forecast for the next quarter. However, the stock initially got hit after hours because the bar had been raised. And who's going to go out and buy a cup of coffee if the CDC says all hell's about to break loose? So people nitpick and sell the news. We saw something similar from Microsoft. They beat the numbers with an excellent quarter across the board. Yet the stock rolled over in after-hours action because it had run up substantially over the past couple of months. There, I have to believe that one. Nobody feels like a hero in tech stocks after today's beatdown. So that one, even though my trust owns it, is not my fave. Advanced Micro, it showed you that Intel's problems might be the result of company-specific ineptitude rather than industry-wide issues. But the CDC says sell AMD. Like, the CDC is a big brokerage house. Finally, Apple knocked it out of the park tonight with a record quarter. Remember all those analysts who told you to worry about their channel checks showing weak component orders? As usual, they were dead wrong. Apple posted 29-cent earnings beat off a $1.01 basis, much higher than expected sales. In fact, they were firing on all cylinders. Every major line item was better, especially phones and wearables. Chinese business up 58%. I was worried about a crackdown. Once again, this is why you own Apple, don't trade it. So why is it down, and why will it be down big tomorrow? Because they said that maybe the next quarter won't be as good as this one. Who can blame them? It was a record quarter. But you have to understand, the prism takes that stuff seriously. Sure, many of these stocks did trade down after the close, and they will trade down again tomorrow, okay? But that's all about the negative prism and not a true reflection of what are some really amazing businesses whose stocks will certainly be thrown away for tomorrow and maybe even the next day before you can buy them. The bottom line, please don't take your cue from the day-to-day action, because that just tells you you're using the filter that we're all using instead of doing your own homework and making your own judgments, as a lot of the trash that was thrown away today and tonight might just turn out to be the market's treasure once we reach herd immunity, CDC, and we will reach herd immunity sooner than Wall Street expects. We just might not like how we get there.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.